Citadel's Ken Griffin said investors are starting to view gold as a safer asset than the dollar, a development that's really concerning to him. Griffin stated that the United States is seeing fiscal and monetary stimulus akin to what normally happens during a recession, which is stoking markets, and described the U.S. economy as being on a bit of a sugar high. Griffin said the $100,000 cost to keep employees on H-1B visa won't be a major hit for his company, and instead worries about talented students choosing not to come to the United States at all. Here we go. Ray Dalio echoes Ken Griffin in seeing gold as safer than the U.S. dollar. So we're seeing all these guys, but I think what the world is missing is this is not a trade. Like they think, oh, I'm going to catch gold from 4,000 to 5,000. Gold could go to 10,000. Oh, I'm going to catch Bitcoin from a $100,000 dip to 130,000. Bitcoin's going to go to $1 million a coin.
When Wall Street starts whispering about gold again, you know the old system is gasping. Citadel's Ken Griffin openly admitted what everyone feels, but few say: trust in the dollar is evaporating. Money is fleeing to gold, not for gains, but for survival. That's not investing, that's instinct. And when the stewards of global finance sound scared, you pay attention. But here's the twist. Jack Mallers isn't looking backward. Gold? It's just the appetizer. Bitcoin is the main course. Even amid the chaos that saw Bitcoin plunge from $121,000 to $104,000 last week, a $19 billion liquidation that rattled over-leveraged traders, Mallers doesn't flinch. He sees it for what it is, a system in transition. This crash isn't a failure. It's the curtain rising on a new era. The IMF warns of a disorderly global market correction. Governments wobble, deficits swell, geopolitical tensions flare. The old system is fracturing, and yet Bitcoin stands resilient, quietly absorbing the shock while the world clings to paper and metal. Mallers isn't chasing highs or fearing dips. He's watching the narrative pivot, from hedge to foundation, from temporary refuge to permanent architecture. This isn't a market moment. It's history. The dollar trembles, traditional finance falters, and in the eye of the storm, Bitcoin is already breathing life into the next monetary system. Mallers isn't betting on numbers. He's witnessing the system's last breath and the birth of something unstoppable. Let's watch clips from Jack Mallers' latest market analysis. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
We're seeing this now as a recurring pattern in the United States. You'd have to rewind only to April to remember the last time we had market chaos and a seeming dysfunction in all relevant markets in the United States of America. That was the so-called Liberation Day or Liberation Week, where all of us Americans felt oh so liberated. Interestingly, the Trump administration could not muscle through a full week of their liberating plans before they reverted on everything, delayed the Chinese tariffs, delayed many of the tariffs, reneged on most of the tariffs because the Treasury market dysfunctioned. You saw stocks down, bonds down, yields up, dollar down, gold up. That is a flight out of the U.S. As a country, we've hyper-financialized. This post-1971 dollar means because of globalization, we don't produce any of our stuff. We only mainly export the dollar is our main export, and we've hyper-financialized. And so we have an inability to garner any leverage and to negotiate with anyone like China for many reasons, one of which is because we rely solely on our financial markets and our financial instruments. And if they don't like it, we don't like it. And so this, guys, is we're just redoing Liberation Day all over again. So you saw stocks down, Bitcoin down. I've said before, Bitcoin is the most accurate gauge on liquidity. Bitcoin is the smoke alarm. And it goes both ways. That means over the last 15 years, it's been the best performing asset in human history, bar none. I don't give a shit what early startup you were a part of, what gold your dad gave you as part of your inheritance plan. It doesn't matter. No one has outperformed Bitcoin, and it's for that reason. But that also means on the downside, when markets are in turmoil on a Friday night, Bitcoin's the only 24/7 free market at significant scale globally that everyone has access to. And so Bitcoin to me is the ultimate truth machine. There's no other market open 24/7, accessible to everyone, and truly free. It is a truth machine. And so you saw markets across the board freak out, start to print red, and you saw Bitcoin lead to the downside because the world started to ensue panic. Now, here we go. Look at that. Look at that candle. That's a 12-hour candle. So Bitcoin went from over $120,000 to around $100,000 was the low it printed in a 12-hour time span. Insane. For context, this was the biggest liquidation in the crypto market's history. And we'll get to that in a second. Obviously, you guys know Bitcoin, there is no second best. But for context, the COVID crash was over $1 billion in liquidations. When Sam Scamman Bankman-Fried stole $10 billion from everybody, there was a little over $1 billion in liquidations. On Friday, there was almost $20 billion in liquidations across the cryptocurrency sector. That is the biggest liquidation event in this industry by far, in order of magnitude bigger, 20 times as big almost as other massive events in this space, just for context. When this happened, obviously, I'm the CEO of Strike, I'm the CEO of 21, so I get on the phone, I get in meetings, we start solving things for customers, we get to work. But I immediately texted some of my buddies and I said, how long do you think until Trump reverts? Until he posts and says, you guys know I like China, right? You guys know that it's not like we're not going to come to terms, we're not going to find a deal. I'm still going to take the meeting in China. How long until he pussies out? Because like I said, we have no leverage. We are a hyper-financialized country. We rely solely on our stock market to finance both our interest payments and as a form of export globally. We can't afford for the S&P 500 to open up 10% down, 20% down, and persist. We would default as a country. This is what we saw Liberation Day. I texted immediately, buy the dip. I'm texting my family, I'm texting my friends, buy the dip, buy the dip, buy the dip. Liberation Day 2.0, Liberation Day 2.0. Unless you believe that the United States of America is willing to live through a form of austerity, a Great Depression greater than any other depression in the history of humanity, if you think the American people will vote for that, will not riot against that, and that the Trump administration has the cojones to realize the loss themselves and eat it like a man, buy the dip. The only way out is for them to print the money. So we were in the 104s, 105s, 106s during peak bluff. During peak, we're going to pretend like we can jam the dollar down people's throats. We're going to pretend like the world actually wants U.S. treasuries. And I say, wait for the reversal. Do not get fooled. This is Liberation Day all over again. We just did this in April, you guys. Do people have that short term of a memory? We just did this. Trump came out and said, we're going to force everyone else to pay for the United States' mistakes over the last 50 years. We've wasted $37 trillion and gotten nothing in return because of fiat maximalism. How are we going to solve that problem? Well, we're going to force everyone else to pay for it. That lasted about a week before we reverted on it all, started printing money, and markets kept going up forever. Same thing goes here. Now, I don't know if the bluffing is over. Who knows? Maybe Trump gets out and he tweets, tariffs back on. I'm telling you right now, they have to print the money. The post-$71 is over. It's over. These are temporary. Buy the dip. The United States is trying to perpetuate the little marginal pieces of the 1971 dollar that still benefit them. And the world has had enough. We are moving on to neutral reserve standard. I mean, I toss this in here just for the shits and giggles, but I could do this literally every day. if you guys wanted. Latest data from the IMF shows that the Central Bank of Brazil increased its gold reserves from almost 16 tons in September, its first addition of gold since July of 2021. You have to own real things now. Pieces of paper and empty promises no longer cut it. And this is a phenomenal thing for humanity. We are meant as a species to be governed by the physical laws of the universe, by Mother Nature. That's where we are best. Humans don't prosper and don't do well in some fabricated version of Narnia that a bunch of unelected weirdos invented, where value is measured by pieces of paper that someone can print out of thin air. No man should work for what another man can print, period. And as Bitcoiners, we know this, that if you want real stuff, you need to own real stuff. If you own dollars, you get less oil, less housing, less food. If you want real stuff, you need to save in real stuff. If you own Bitcoin, you get more housing, more oil, more food. It's that simple. This is Bitcoin against oil. So none of this is new to us. If you've been a listener of the Jack Mallers show, you don't need to literally translate Putin's speeches like I do and hear what the hell he's talking about over there. You don't have to do that. You tune into this show, you know you got to save in something that no one else can print. No one else can dilute your work that you get up and do every day for the people around you and your family. That's the only way out of this.
The system cracked and the mask slipped. Markets panicked, the dollar stumbled, and nearly $20 billion was wiped from crypto in hours. But this wasn't chaos. It was clarity. The truth hit like a freight train. America's power lies in money printing, not production. And when that illusion wobbles, everything else does too. Amid the noise, one asset flashed like a warning light, 24/7, borderless, untouchable. The world is done with paper promises. Real value is back. Now the only question is, what are you holding? The United States is quietly trading printed paper for real-world power. Behind headlines and politics lies a simple truth. Fiat is being swapped for rocks, land, and eventually Bitcoin. This isn't charity or diplomacy, it's survival. As gold hits new highs and sovereign wealth funds inch into Bitcoin, the old system is quietly crumbling. The dollar is losing trust, and the world is shifting to assets you can't fake or inflate. The pivot has already begun. Most people just haven't noticed yet. Let's take you back to hear more from Jack Mallers.
Next chapter. The U.S. sells treasuries to buy rocks. So I just hinted at it. We're going to continue to it. So a lot of Bitcoiners were upset that the U.S. government bought $20 billion of Argentine pesos, but not the Bitcoiners that listen to this show, because we said on this show last week that the United States was doing this not because we want to literally own Argentine pesos. Come on, nobody in their right mind believes that. We're doing this because Argentina is a naturally rich land. It's naturally rich soil. They have a lot of physical commodities that we want. And if we did not give them the loan, do you guys have a good guess on who would have given them the loan? Ding, ding, ding. You guessed right. Unless you're a moron. China. Okay? So we didn't have a choice. This is the same thing as the Pentagon buying $1 billion worth of stuff. The Treasury bought $20 billion worth of stuff. Call it a loan to own. You ever heard that? A loan to own? Yeah, you give the guy a loan, but the guy you're giving a loan to, you got him by the balls. Loan to own. You know they're going to default. What, we expect Argentina to pay us back? On what planet? They haven't been able to pay anyone back since I've been born. They're not paying us back. This is a loan to own. Now, the interesting thing about this with Argentina that I want Bitcoiners to understand is this. If the United States is willing to do this, what else are they willing to do? That's the signal. What Bitcoiners are missing there, the government told us they'd buy Bitcoin and they bought Argentine pesos. Yeah. Okay, I understand that. That's a fun headline, and I know it gets the Bitcoiners wound up, and you're not wrong. You're not wrong. But what's actually happening here is the United States has to reindustrialize like our life depends on it. We are so short on natural commodities that we need to produce real stuff. We don't have all in this country right now. All we have is a bunch of people in San Francisco making technology and a bunch of people on Wall Street making financial products. That's all we have. And so we have to reindustrialize. And so the ultimate priority at this very moment in time for the United States is to get their hands on allies that have the real stuff. That's what this was. Now, the fact that the United States went through the U.S. Treasury, not the central bank, not the Fed, this wasn't a swap line, the U.S. Treasury used the Exchange Stabilization Fund to give Argentina $20 billion. We're literally printing dollars to get real stuff. That is currency debasement. All of a sudden, it's not that far-fetched for me to think that the United States won't print money to buy Bitcoin. Neutral reserves have already won. People say, when will Bitcoin win? My brother in Christ, we've already won. We've already won. People just haven't realized yet. This was today. Gold, another all-time high. Gold breached 4,100. It's just up only for gold. And people are saying, well, gold's getting really toppy, right? Is this the top? Guys, I think gold's going to like 10,000 over the next few years because people keep calling this a debasement trade. That's why I put it in quotes for the title of this. Oh, it's a debasement trade, a debasement trade. It's not a trade. It's not a trade. This is the new normal. The world has to be collateralized by real shit. If you don't own gold, if you don't own Bitcoin, no one can take you seriously. If you're a country and you want to do business, you want to export, you want to trade, okay, what do you have over there? Oh, we have a bunch of U.S. debt. Oh, never mind. Don't talk to me. That's what's happening right now. And you guys are calling tops. Fiat has no bottom or Bitcoin has no top because fiat has no bottom. Like this thing can go forever. These things we've already won. You guys think the dollar's shout out to my people in Europe. The euro is more than the dollar. The yen is more than the euro. The pound went from world reserve to absolutely irrelevant. Buy gold, buy Bitcoin. So simple. I could not agree with this tweet more. What if stock market gains were measured in gold instead of dollars? As John authors notes, denominated U.S. stocks in gold rather than dollars, and they've been in decline since the dot-com bubble burst 25 years ago. Guys, we've already won. Gold has now been outperforming the stock market, and Bitcoin's been beating the shit out of gold. Gold's performed 112% over the last 5 years. Bitcoin almost 1,000%. We've already won. The world just hasn't realized yet. The debasement trade is in overdrive. Gold has recently climbed much faster than global liquidity, a clear sign of growing mistrust in the monetary system. A clear sign that the post-$71 is dead. Finito. Goodbye. Rest in peace. I've said it before. Gold is just much bigger than Bitcoin. It has a lot more history than Bitcoin. So why are central banks not buying gold? For that very reason. But why are they not buying Bitcoin? They're not buying Bitcoin yet. It's not they will never buy Bitcoin. It's yet. Why aren't countries buying Bitcoin? Why aren't central banks buying Bitcoin? Because it's too small. Because they don't know how to custody it. Because they don't know how to do it. But they're working on it. And this was just in over the last week. Luxembourg's sovereign wealth fund allocated 1% of its $900 million portfolio, so about $9 million to Bitcoin ETFs. It's coming. It's coming. I expect companies to move first, which we've seen with MicroStrategy, with 21. We're going to be big buyers of Bitcoin. We have been. We'll continue to be. Then I expect sovereigns, countries, eventually central banks. 100%. This from our good friend Marty Bent. It's happening again. Most people just don't realize it. I thought this was an incredible tweet. On the left is gold priced in the Weimar marks, that hyperinflationary time. Everyone has seen that. Look at that chart of the Weimar priced in gold. Now, look at the chart on the right. That is Bitcoin priced in dollars. Looks eerily similar, doesn't it? People say, we're not going to live through hyperinflation. Well, in what? In Bitcoin terms, we already are. If you don't get to stacking some sats, if you take your sweet time, to the friends I grew up with, 13 years ago, I told them, buy yourself some Bitcoin for your future self, for your family. buy yourself some Bitcoin. They say, I'll just wait to see if it works. Okay. Well, at the time, they could have bought one Bitcoin for $50. Guys, I gave my friends Bitcoins for Christmas over 10 years ago. That's how good of a fucking friend I was. They wouldn't buy it. So I literally was handing out Bitcoins for Christmas. Like, plural. Nowadays, they waited to see if it works. That $50, how much does that $50 get you? One Bitcoin? No. Well, okay, half a Bitcoin? No. A tenth of a Bitcoin? No. One Bitcoin's now $115,000. That's hyperinflation. Hyperinflation against what? I'd keep an eye on this. I would not be surprised if we look back and the gold to dollar chart looks like the Bitcoin to dollar chart looks like the gold to Weimar Marx chart. 100%.
The latest Bitcoin crash wasn't just another volatile blip. It was a response to something much deeper. When President Trump threatened to double tariffs on Chinese imports, markets reacted with immediate panic. Bitcoin, which had recently broken new all-time highs, plunged below $120,000 and kept falling, touching lows of $109,000 on Binance. This wasn't just about politics or trade. It was a reminder that global markets remain dangerously tethered to unstable policy decisions and fiat systems rooted in confidence, not substance. Over $19 billion in crypto liquidations followed, making it one of the harshest single-day corrections of the year. Yet, as derivatives traders scrambled, institutional buyers stayed calm. ETF inflows remained steady, showing that smart money still views Bitcoin as a long-term asset. Volatile, yes, but structurally sound in a world full of political theater and monetary manipulation. This event perfectly echoes what Jack Mallers has been warning for weeks. When governments start selling treasuries to buy rocks and real assets, and when loans to foreign nations double as geopolitical chess moves, the illusion of monetary control starts to break. Mallers does not see Bitcoin as a hedge. He sees it as the new foundation, a neutral, incorruptible reserve asset rising while fiat currencies erode. The panic we saw was not Bitcoin failing. It was the truth machine doing its job, exposing just how fragile the current system has become. In that moment of crisis, Bitcoin did not just crash. It reminded us what real value looks like, and that is why it is here to stay. As we wrap up, if you had to choose between fiat, gold, or Bitcoin right now, what would you hold? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.